If you're a shareholder or have been sitting on the sidelines watching the stock, now is the time to pay attention. e.l.f. Beauty stock is making a move and it's not just a noise. In this video, I will deep dive into what's really driving this rebound, analyze the business, what's the numbers telling us, and why 2025 might be the breakout year you cannot afford to miss. Is this the next big compounder in your portfolio? If buying a stock at $100 per share can turn it to thousands of dollars, we will talk about the potential returns for investors if you decide that this company is for you. What's going on, investors? Hopefully, guys are doing well out there. e.l.f. is a rapidly growing beauty company. In 2016, e.l.f. made $230 million in revenue. Fast forward to today, e.l.f. now is generating $1.3 billion in revenue. This is more than 4x the revenue over the last 10 years. And looking into the projections from analysts, in the next 3 years, e.l.f. will be generating almost $2 billion in revenue in 2028. The main reason why the stock crashed is decelerating of the growth. If you can see from the growth perspective, the revenue growth accelerated in 2022 and 2023, 2024 significantly, almost reaching 80% year-over-year growth. But currently the revenue is decelerating, and from the analyst perspective, they are projecting approximately 13% revenue growth over the next 3 years. This is the worst thing which can happen to growth company when the growth is decelerating, and investors will immediately apply different multiple for this company. That's why the stock in this case will collapse. We saw this with PayPal, we saw this with Palantir. All the growth companies have the same issue. When the growth slows, the multiple will be recalculated and the price of the share will collapse. e.l.f. operating mostly in the US and generating north of $1 billion from the US, but meanwhile e.l.f. is also scaling the business into international markets and currently generating already $250 million in revenue in just 1 year. The international revenue currently is taking 25% of the US revenue. This gives the company additional diversification, and also international helps the revenue to re-accelerate. e.l.f. has one of the best margins in the beauty industry, with the gross margins reaching 71%, operating net and free cash flow margins reaching close to 12 to 11%. These are absolutely outstanding numbers. Looking at two publicly traded competitors of e.l.f. Beauty, the first one is Coty and the second one is L'Oreal. So for the Coty, the gross margin is around 65%. Meanwhile, for L'Oreal, the gross margin actually close to 75%, absolutely outstanding. But for the e.l.f. Beauty, the gross margin is, as we just saw, around 71%. And this slide demonstrates the competitors of e.l.f. Beauty. L'Oreal, 115 years old. Maybelline, 109 years old. Revlon, 92 years old. And e.l.f. Beauty, just 20 years old. So e.l.f. has a lot of opportunities and significant growth in the future. A lot of success for e.l.f. Beauty company, and also the stock tenfolding in the last 10 years is due to the outstanding management. Taran Amin is the CEO for e.l.f. Beauty from 2014. Before e.l.f., Taran has extensive leadership experience in consumer goods. In the Clorox company, he held senior roles including VP and General Manager. In Procter & Gamble, he spent 8 years in brand management across multiple product lines. When he joined in 2014, e.l.f. was a niche, low-cost cosmetics brand. Took the company public in 2016 and scaled the revenue from 100 million to staggering 900 million and continue growing. What is the competitive advantage for e.l.f. comparing to its competitors? These 5 things work together like a cycle. Each one helps power the next. Passionate owners. Everyone at e.l.f. is encouraged to think like an owner. Many employees actually own the stock in the company. Value proposition. e.l.f. makes high quality beauty products at low prices. That's a huge reason why people love the brand. Powerhouse innovation. They are always launching new and exciting products and fast. e.l.f. listens to what customers want and quickly brings fresh ideas to life. Disruptive marketing engine. Instead of relying on old school ads, e.l.f. uses social media, influencer, and viral moments to connect with younger shoppers. They know how to get attention without spending tons of money. They run the company very efficiently. That means they keep costs low, move quickly, and get more done with fewer resources. It's a big reason why they are so profitable. In the beauty industry, trends move fast. sometimes in days or weeks. Legacy brands can take 12 to 18 months to launch a new product. e.l.f., they can do it as little as 20 weeks. Why? The main reason why is because e.l.f. is still running as a startup, so they are flexible and they're agile. The main value proposition for e.l.f. is of course the price. AUR stands for average unit retail. It's a key retail metric that represents the average selling price of the product. e.l.f. Cosmetics has an AUR of $6.5, meaning on the average their products sell for $6.5 each. Top mass brands average around $9.50 per item, meanwhile prestige brands go for 20 plus bucks per item. e.l.f. is significantly underpriced relative to its peers, especially prestige brands. If e.l.f. can raise prices or premiumize while retaining customers, that's a huge margin expansion opportunity. Here you can see the price difference for e.l.f. comparing to the prestige: $14 versus $49, $10 versus $38, $8 versus $40, and $12 versus $38 for the prestige item. It's a significant savings across the board for e.l.f. consumers. And when you're investing in any company, you want this company to take market share, not lose market share. If the company is losing market share, there is no reason to invest in this company, except of course the valuation is too cheap to ignore. But for our case, e.l.f. Beauty is taking market share rapidly. In 2019, they are top 5 by market share. Fast forward to 2024, now they are top 2, taking 12% of the market share. This is the most important for investor to know, that the management is executing on a very high level and the company is taking market share from the competitors. e.l.f. products is presented in most important retailers in the US and abroad: Target, Walmart, Ulta Beauty, and many more. What I love the most about e.l.f. Beauty is their advertising strategy. Instead of using the legacy ways to advertise, they are running campaigns in social media and their ads is absolutely going viral. You can see these ads was in 2019 and 2020. This ads was watched by 7 billion people. This is absolutely ridiculous. More than 5 million videos created for this challenge. Absolutely mind-blowing. And another campaign in 2024, Let e.l.f. sold 50,000 units in just 10 hours. It was #1 on TikTok Shop in the US. Looking at the most important highlights from the latest earnings report, the full year fiscal 2025 net sales grew 28%. The Q4 marked 25th consecutive quarter of net sales growth and market share gains. This is absolutely amazing to see. Announced agreement to acquire Rhode, a fast-growing beauty brand founded by Hailey Bieber. The acquisition of Rhode will further strengthen and diversify our portfolio of fast-growing disruptive brands. Hailey Bieber is a wife of Justin Bieber. Currently in Instagram she has 55 million followers and every of her posts is collecting 2 to 4 million views. After the acquisition, Hailey Bieber said, "When I launched Rhode in 2022, I always had big dreams for the company. And the most important thing to me is to keep bringing Rhode to more spaces, places, and faces globally." So today, I am so incredibly excited and proud to announce that we are partnering with e.l.f. Beauty as we step into the next chapter in the world of Rhode. And Hailey Bieber is not just selling the brand and walking away. Hailey Bieber is very incentivized to make this brand perform well inside the e.l.f. The deal is comprised of $800 million at closing, subject to customary adjustment, in a combination of $600 million of cash and $200 million of stock, and potentially earn-out consideration of up to $200 million based on a future growth of the brand over the 3 years time frame. So in English, this means that e.l.f. will pay $600 million in cash, $200 million in e.l.f. stock, so they will issue a new stock, which is kind of dilution for existing e.l.f. shareholders, and meanwhile $200 million it will be incentive for the Hailey Bieber to continue driving the growth for the Rhode brand inside the e.l.f. Beauty. And if this will be the case, she will get another $200 million reward for that. In terms of the balance sheet, does e.l.f. actually has this money to pay for the acquisition of Rhode? Actually, currently does not really have so much cash. So probably e.l.f. will take some debt and also dilute shareholders. The company ended fiscal 2025 with $148 million in cash and cash equivalents. In terms of the fiscal 2026 outlook, due to the wide range of potential outcomes related to tariffs, the company is not providing a fiscal 2026 financial outlook at this time. So saying that uncertainties because of the tariffs is too much, so we cannot really predict the short-term fluctuations of our revenue, but for the long term, I'm very confident that this company will continue to execute on a very high level and continue to grow. In terms of the future growth for the company, currently they are making 1.3 billion in net sales for 2025, and they expect 2x for the international, 2x for the skincare, and 2x for the cosmetics. So in the future, they expect north of $3 billion, which is almost 3x from here. Unfortunately, I could not find in the presentation what is the timeline for these projections, but usually it's around the 5 years. So in the next 5 years, e.l.f. is expecting almost 3x their revenue. Coming to the valuation model, and which return could you expect if you buy e.l.f. at these prices today? So currently e.l.f. at 1.3 billion in revenue and projecting 18% growth over the next 5 years, projecting net income margin of 15 and price to earnings of 25. We do not expect e.l.f. to start paying dividends, and we also do not expect e.l.f. to start paying buybacks. All this calculated, e.l.f. has upside potential of 74% over the next 5 years, or almost 12% per year every single year over the next 5 years. If you want to double your money with e.l.f., you need to buy e.l.f. at $98 per share, and the expected share price in 2029 is $196 per share. You would ask, okay, this is very nice. You are telling me that I could double my money if I buy e.l.f. at $98 per share, but currently e.l.f. is already trading at $112. So how could I know that I need to pull the trigger at $98 per share? And I have the answer for this question. Currently in a Google Drive, I organized the buying list. You can see I have many companies here, and for every company I have 5-year expected returns. Percent return per year. So if we have, for example, for HIMS, we expect 135% return over the next 5 years, or 18% CAGR, and the same for Google, 122%, or every single year 17% CAGR. And we have many companies here, and I have calculation for Pepsi, I have calculation for HIMS, for Apple, for Alibaba, Amazon, Google, so on and so forth. And the most beautiful thing about this wish list is that the prices here will be automatically refreshed every single day while the stock is trading in the market. So every time if you have some additional cash to deploy into the market, you just go to this table. Okay, I have opportunity in HIMS, I have opportunity in Google, I have opportunity in Nvidia, but let's say for Hilton, the current risk to reward is not very significant, as 34% over the next 5 years probably is not the best. Or for example, for Starbucks, I'm expecting actually negative return over the next 5 years. So in this case, you will refresh your research about the Google or about the HIMS, and you can pull the trigger. If you are interested and find this wish list useful, the link will be in the description and pinned comment down below. And this is exactly why I have e.l.f. Beauty in my public YouTube portfolio with 10% allocation. I bought e.l.f. at $61.10 per share, and it's already almost double my money with 85% in a green. Currently, I still have more than $3,000 in cash, which I did not deploy. I did not really expect the market will reshape recovery so fast, so I still have $3,000. I'm looking for the opportunity, and the wish list will help me to find this opportunity to buy more and allocate all my capital into the market. Currently, the portfolio is doing quite good. We are 16% year to date. This portfolio we started in April, so just in 1 month, my portfolio made 16%. Of course, the market recovered very fast, but I will continue looking for the opportunity to deploy the cash. If you would like to know what I am buying and when I'm buying, please consider subscribing to the Discord channel. This is absolutely for free. I will be sharing all the trades, I will be sharing my research, the breaking news, and so much more. Thank you so much, my friend, for stopping by. I appreciate your time watching until the very end of the video. If you find this video helpful, consider subscribing to the channel, and I will see you in the next one.